Hi, my name is Greg Maddox, Senior Exit and Succession Advisor with Cultivate Advisors and creator of the Exit Lifestyle Accelerator. Many of our clients come to us wanting to grow into a successful exit at some point in the future, but they have no clue where to start. Or worse yet, they've been blindsided by unsolicited offers to buy their company, but they feel powerless in the negotiation because they have no idea how to substantiate their value to a third party. So they either miss out on a golden opportunity to fund what's next in their life, or they end up accepting a lowball offer that they end up regretting. The truth is that exit planning is not about getting you and your money out of your business at some point in the future. It's about getting what you want out of your business starting right now. The first step in getting what you want in the future is to understand where you are right now. And once you have this clarity, you'll be in a position to get your team, your family, and your professional advisors literally on the same page, all working together to get you what you want across business freedom, financial freedom, and personal freedom. Because your business is the goose that's laying the golden eggs for you and your family, our Business Insights Report is the foundation to that clarity and your ultimate freedom. Let me explain what's included in this service. Today, I want to walk you through our platform and the resulting Business Insights Report that we use to accelerate the freedom points of our clients. I'll explain some of the key features and how we actually use it when we're delivering it to clients. And first, you'll notice that the report's extremely comprehensive because it's based on financial information, a non-financial questionnaire, benchmarking data, and any relevant add backs. Because each of our clients' situations are unique, the report's highly customizable. We're able to create a structure diagram, for example, to visually explain who owns which assets and why that might be good or bad from an asset protection, taxation, and wealth creation perspective. In other cases, we might insert some benchmarking data or perhaps some comparative sales or recent transactions to use in the valuation, which is a key component of this report, but only one part of it. Let me walk you through some of the other insights that are uncovered in this report. As I said, we'll look at the structure. We'll analyze how effective that might be in terms of business succession, exit planning, wealth creation, asset protection, even family succession. We'll do some really detailed financial analysis. We'll start to work through the profit and loss and balance sheet, and we'll identify items in those reports that are add backs or adjustments. In other words, perhaps they're just not a normal business expense that you incur regularly. Maybe it's a one-off, like a legal case. Maybe it's something that was paid to a related party, like rent on a building that's owned by the family that owns the business. Or maybe, like many owners, you're just not paying yourself a market salary, so we have to adjust for that as well. The end result is that we will have a very clear picture of the true profitability of your business through the eyes of a potential investor, lender, or buyer. And understanding how a third party will view your business years ahead of schedule is actually priceless in terms of the amount of additional value you'll be able to create. Now, once we've done the add backs and adjustments, we can then look at a detailed analysis of the final adjusted financial statements, the profit and loss, finance balance sheet, operating balance sheet, et cetera. And from that, we start to see the trends, the long-term trends. We'll take 4, maybe even 5 years of data and examine whether that trend is what buyers, investors, and lenders are really looking for, which is steady growth with upside potential. Or are you all over the place? Do we have one fantastic year, followed by a poor year, then a rebound year? Obviously, the trends are an important guide. And if you're thinking about selling, you'll want at least 3 years that tell a good story for you. We then have a financial scorecard, which actually tells us how financially strong your business is. It's very graphical. We can see where you've performed well. We can also see where we're underperforming and what might be reducing our overall score. Then we start to get into analysis of things like break-even points. How much money does your business need to turn over just to cover expenses? And even more importantly, what does our safety margin look like? In other words, if there is a drop in revenue for some reason, how much of a drop can we withstand before we're in trouble? Anybody who lived through the pandemic as a business owner knows just how important that metric is. Then, of course, we get into cash flow. And as the saying goes, cash is king. So we need to understand where our money comes from and where it ultimately goes through a revenue to cash analysis. And importantly, from a business buyer, lender, or investor's perspective, what's the free cash flow that the business is capable of generating each year? Because that's actually where they're going to get their return on investment. And that's what they're looking for. And most owners actually need to grow the value of their business in order to hit their freedom point. If they were to sell it at the current value, they would not walk with enough money after taxes, fees, and other expenses to fully fund what they want to do next. So we start to look at the sustainable growth rate. Not many people include this in their analysis, but it's vitally important when we're talking about succession and exit planning. What it tells us is how fast your business can grow without adding more debt, raising more capital, or dramatically changing the way you operate. And that's quite an important number strategically if you think about it. If our plan is to grow your business by 30% a year to get to the valuation that you need in order to hit your freedom point, then this sustainable growth rate will actually tell us if that's possible or not. This line of thinking is directly linked to the credit scorecard. Are we, in fact, able to borrow money if that's part of our growth strategy? Or could your business carry the debt of your management team buying you out? Another critical component of value is understanding how we track against our competition. The benchmarking analysis allows us to look at and compare our business performance with others in the same industry. Are we over or underspending in particular categories? Is our revenue generation per person similar, less than, more than our competition? All of these are key identifiers that help us find if there's a profit gap in your business. And of course, the profit gap is money that we are wasting that could drop to the bottom line if we just shored up our operations. And people with deep enough pockets to buy your business have options. They'll be looking at you and your competition. So you need to understand if you are best in class or what it takes to get there years before you exit. Then we get into the non-financial scorecard. In the top right-hand corner, you'll notice that there's an overall score, but we break that down into 5 different categories. The key areas of non-financial performance in a business are really important because they speak to risk. And wherever there's risk, we're reducing the valuation. So identifying those early is actually quite important. We do the same sort of analysis through a buyer, investor, or lender's lens when it comes to exit readiness. How well prepared is the business and the owner for exit or sale? Have we got strategic intellectual property or intangible assets that will add significantly to our value? Is the owner financially and mentally prepared for life after their business, whatever that is? Most of our clients aren't going to go sit on a porch on a rocking chair, but they want to fund something significant with whatever's next for them. And are we prepared for that? And of course, we get into the valuation summary. We analyze the risk in the business in terms of the economy, the industry, business categories to make sure that we see where we're actually holding risk in the business that might impact the valuation. And that feeds into the calculation of weighted average cost of capital, which is a fancy way that savvy buyers determine how much they're willing to pay for your company. We'll help you understand what that means for you as a successful entrepreneur without you having to become a finance expert. But the bottom line is the people who pay the most for businesses will do this type of analysis. So you need to know how you stack up, and we'll make it very easy for you to understand. Finally, we get to the business valuation. Now, while that is useful, it's important to know for most business owners, I actually don't think it's the most important thing in this report. For me, the value potential page is critically important. It shows us not only what the value of your business is today, but more importantly, what your business could be worth at the same revenue if we just made certain improvements. And we'll map out exactly how we'd help you make those improvements in our detailed implementation plan, following our proven process that we've used to help hundreds of owners quickly maximize the business value to achieve a successful exit on their terms and timelines. And for many of our clients, that's years out into the future. Or for some, it's just an operational exit, where they're just going to step back from the day-to-day, maintain ownership, and let the leadership team run it without them, and they'll just pull dividends and profit out of the business. If you're interested in learning more, shoot me an email or give me a call. I'd love to help. In the meantime, check out the other resources and video testimonials on this site.